Good evening, folks. Today, I want to talk about the unintended consequences of just not knowing what you're doing and what the actual long term impacts could be. And I want to talk about individual stocks that, if you're buying them, and these are luxury brand names, whether you're talking about shoe companies like Nike, Lululemon, they're going to use those as probably the examples today. But I think we are on the cusp of what could be a potential collapse of luxury brands. And it's fascinating because this is something that really only just spurred up over the weekend. It's something that I only just became aware of today. And then obviously, this is stocks to buy, baby. We're going to look at my portfolio. And I want you to understand the risk of what's going on in this current market environment with China, Trump, because we were all sitting here on the weekend and, we were watching pre-markets as soon as they opened. I'm sure as many of you did. And pre-markets were pumping pretty hard. I mean, I think the NASDAQ or the Dow was up, everything was up like 1%. I think the NASDAQ was only up almost up 2%. We were all sitting here being like, yay, because there was some news that Trump made some form of a deal or they were working with China, blah, 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 blah. Some bullshit. Don't know what's true anymore. Trump's fake news. The fake news is fake news. It's all fake news. But Trump tweeted, but basically on Truth Social, which you can see, I'm never going to create an account for this shitty platform. But nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst. There was no tariff exception announced on Friday. These products are subject to the existing 20% fentanyl tariff because it has nothing to do with tariff. He's just using it as a ploy to enact policy he wouldn't be able to otherwise without going through Congress and a bunch of other red tape bullshit that he, as king doesn't want to have to deal with. And they are just moving to a different tariff bucket. The fake news knows this, but refuses to report it. We are taking a look at semiconductors. Yeah, so the news I remember seeing was like they were going to alleviate tariffs on electronics and some of the supply chain around iPhones and that. But it turns out that was fake, just like the 90-day pause was fake too, wasn't it? I don't even know what's going on. What is being exposed is that we need to make products in the United States and that we will not be held hostage by other countries, especially hostile trading nations like China, which will do everything within its power to disrespect the American people. Yeah, because calling them peasants when they produce almost all our products was a great idea, JD Vance. Whew, yeah, they're being super disrespectful. I get it. I know they've done some stuff with the trade barriers and ripping products off and not caring about patents. I get it. But trust me, this rabbit hole and how much China holds over us, I'm going to show you, is so much more powerful than I think Trump even realizes. But we also cannot let them continue to abuse us on trade like they have for decades. Those days are over. The golden age of America, which includes the upcoming, because it's not like we're in the golden age now, right? Upcoming tax and regulation cuts, a substantial amount, which was just approved by the House and Senate, will mean more and better paying jobs, which I highly doubt. Making products in our nation and treating our other countries, in particular China, the same way they've treated us. I mean, here's the funny thing. It's like companies, like, regardless of borders, I just want to tell you this right now, regardless of borders, people will enact based off policy. But because of the policy that's been in place, because of the 1980s, 90s, where everybody realized global offshore manufacturing was the way to go. And back then, it was still hard to get like China's level of manufacturing to be, that great, right? But things happen. They started producing better autos. And before you know it, like they are the dominating realm of manufacturing. So much so that over the weekend, if anyone that's been paying attention or been on TikTok, there's been a trend happening right now. And basically, I haven't pulled the videos up. You can search it. It's just basically like, Chinese products. These people that basically manufacture, Chinese manufacturers, are going on TikTok and they're exposing mega brands, basically. So, here's a lady talking about it, and I just took a screen cap of the comment section saying, "I'm neck deep in Chinese manufacturer TikTok, and I'm living for it. I'm thrilled to see the U.S. political posts are being pushed aside by Chinese manufacturers spilling the tea. I woke up this morning and every second video is a Chinese manufacturers. I'm here for it. So deeply invested in Chinese manufacturers right now, lol. And this is because these mega companies, whether it be Birkin, these companies that charge like $30,000 for a purse, yes, they are getting name brand, AAA rated material from Italy and all these places. But guess where those materials are going to be manufactured? In China before they go to America. And China's basically showing them, hey, look, we know where these things come from because we're the ones building them and we know what they're being bought for. Here's the prices. Here's what they're selling them for. You can build a Birkin purse for $1,300 US, and they're going to sell it to you for 20 or 30,000. And guess what? We make them too. They just don't have the brand name logo on it, but it's the same fucking purse and we'll sell it to you for $3,000. I am seeing this happen with every mega brand. Lululemon pants, you name it. These Chinese, it's so weird because like out of nowhere, I don't know if they're using AI or how they're getting their English to be so good, but there's just a slew of manufacturers being like, why are you even Tide Pods or dishwasher pods? This guy was like, we produce dishwasher pods for 2 cents and they're the same ones you're buying from Tide. Like, I just can't get over that. It's like, I don't know if this is part of like a China attack, but they're like, hey, guess what, US? These are your companies that are importing this that you are now charging an obscure tax on. And if you're Birkin importing a $30,000 bag, or even if it's being quoted to come over the border at 1,300, whatever, China's like, hey, we're going to cut the price so deep that you're going to buy direct from us now, and you're going to forget your name brand companies and just buy from us. And even with the tariff, you're still getting a discount because your companies are ripping you off because we're the ones building it. I'm just like blown away by what I've been seeing. And I'm like, I wonder if this is truly I'm not saying that this is going to escalate into something serious because people love their brands, right? Like obviously people love their brands. I mean, by all means, did I share this? I hope I didn't click off of it when I was sharing this. You guys, you know what this posts are. I've been so deep into this. I'm hoping you're seeing everything that I'm talking about here. But yeah, I'm really scared for companies like Nike right now. And I feel like anybody that's buying these right now should be shitting their pants. Because yeah, when these companies have built their multi-$100 billion businesses in a country right now that you're in a trade war with, and China's not stupid, and they understand that their manufacturing is superior and cheaper, all of a sudden it puts to question these mega brands. Like, do we actually need them? I've been hearing people buying the fake Lululemons and then doing a side-by-side comparison, and they said there's no difference. So, you know, I don't know if like this could actually reach parity with the full market. Like, I'm curious to how much saturation, because I remember back in the day, like when I was much younger, that I was ordering like fake iPods and stuff on like these Chinese websites just to get an MP3 player, take like a month to get here, and it was just absolute trash. And it's just like that's just not the case anymore, right? Like it's just so wild to me. That yeah, I mean, sure, patents and stuff, I get it. You don't want China ripping you off in that sense, but like, whoo, baby, what I'm seeing these days. And like, I don't know if the market's going to go into full calamity mode, but you got to ask yourself too. Like, I'm not a gold investor to any major extent, but you got to ask yourself, what is happening here? I mean, since like gold has just been going on a tear that is unbelievable. And there's a lot of questions going on if, you know, because there's nobody like me or you. It's not the common person that is just going out buying gold that is driving up these prices. I mean, it's just not me or you. That's not how this works. There's something going on here that's country driven, where whether it be China, whether it be these other countries that might want to start uncoupling from the US dollar, I'm not sure. But if there is an indicator of concern in the market, it is the gold price. I mean, you got to think gold didn't really do anything from basically the '08 financial crisis all the way up to what, 2024, basically. Like if you bought the peaks, you made no return over the last decade. And even still, I mean, the returns aren't crazy here if you're buying the tops over the last since 2020, right? I mean, think about how severe like the pandemic was. And like, when was that? Where's March on here? It's February, March. I mean, gold was already going up before the pandemic, and the pandemic barely did anything for the gold price. But whatever's going on right now in the market, it is leading somebody to be like, oh man, let's buy all this gold. Let's bolster our balance sheets. And I told you guys, I thought that what might be going on is that these countries have been using gold because there was a bit of a sell-off too, right? A small bump of a sell-off. But I really think people are just using gold to bolster their balance sheets right now, especially with like major countries. Because again, currencies have collapsed, right? So during 2024, we saw the collapse of all these currencies, including Canada. And I really feel like a lot of countries are saying, hey, like currencies are getting too volatile. Let's bolster our balance. There has to be something going on. I'd love to see the supply chain of gold right now and who's buying this, because it's got to be a major country. It's got to be a whale. There's just no way. It's kind of like Bitcoin, right? You can see all the whales, but with gold, I feel like it's pretty hidden. China selling treasuries and buying gold. Yeah, China apparently came out and said they're not selling treasuries, though, or at least that's what I heard. It could be nonsense. Who the hell knows? I haven't heard anything about Chinese discounts, tariffs, things, but that's pretty crazy if the mainstream hears that. Yeah, I mean, that's what I was curious about. I'm like, how is this showing up on TikTok? Is it like, is China pushing this on TikTok before the sale goes in or something? Like, how is this happening? It just seems so peculiar that all these manufacturers just woke up over the weekend and they're like, look at all the stuff we could sell you. Here's the websites to buy them. And people are getting sucked into it. But again, you look at the destruction. There's so many small businesses that have supply chains in China they can't change. I think Trump could severely like cripple the economy on the lower class. I mean, you have to see this, right? Like I've been seeing so many small, like maybe 5 to 15 employee like companies that have specialized products that can only be manufactured in China, and they're shitting their pants right now. And again, how long is Trump's presidency going to last if this absolutely fucking implodes in his face? I mean, like I said, there are unintended consequences. Like I don't think Trump understands the fire he's playing with, or maybe he does. I don't want to give the guy too much credit because of the calamity that we've witnessed already, but like, whew, baby. Like if you voted or had respect for this guy, man, like I get why you voted for him in the beginning, but you got to be throwing that shit out the window right now. Like you got to know somebody that's getting absolutely fucking devastated by this shit, right? I mean, you can't tear the markets apart either. And the teasing that's going on, and you can see that it's driving the market volume. And it's just like you shake your head sometimes. You're like, man, what happened to professionalism? What happened to like really being methodical about your thoughts and doing economic assessments and hiring the right people to format those assessments and just really methodically move through the systems and make sure we're implementing the right policy. No, we're just gonna slap crazy numbers and formulas that don't make any sense, and we're gonna get criticized, and billionaires that loved us and trusted us now all hate us. It's like, what the fuck's happening in the world right now? Yes, so let's talk about the buying opportunity. What am I buying? How do I feel about it? Well, as many of you know, as we head into earnings season here, this is the period of what is going to be probably the rockiest earnings season. I would imagine. The pandemic was bad, but the pandemic was one of these like things where we knew that there was going to be temporary. And I think 2022 was arguably worse than the pandemic because we saw such a drawdown in spending, whereas the pandemic spending actually went up because of stimulus and all that stuff. But I mean, if you roll back, I can really only compare this to probably 2022 and the 2008 financial crisis, because these earnings calls are going to be highly, highly unpredictable. What we're going to get is shaky guidance, a lot of uncertain guidance from companies that have direct exposure to international trade, which is a huge majority of them. And we don't have certainty in all of them, whether it's ASML that's going to be posting. A lot of these companies. TSM will be an interesting one. I mean, the banks, we already know. We saw JP Morgan post. We're going to get Goldman Sachs on Monday. The banks should probably do okay because the higher interest rates are still bolstering their bottom line, even though they're putting higher loan loss provisions aside, as we saw with JP Morgan. So, yeah, the week of earnings is going to be absolutely wild, and it's going to be fire to watch how this all unfolds. Now, I am keeping my exposure pretty tight, but I am not buying for the week of earnings or this month, probably. I'm going to take a break. I have gone so balls to the walls because I can't help myself. The market tanked miserably. I've been buying all the way down. I have overextended myself. I have literally took every dollar I could within reason. I mean, I even bought Meta. Literally just, I think on Friday there, Thursday, Friday, whatever. I've been buying the S&P. The wife's been buying. We've all been buying. Like just, I can't even 20, I don't even know how much money at this point. Maybe 25, 30 G's, if not more. I haven't even been counting. I've just been throwing so much money into this market. I've drained my emergency fund, like my stock market emergency fund. I started draining my savings accounts enough that now I have to get the stupid monthly fee impact, the poor person fee. But that's only because I realized that within a couple of weeks of paychecks, I'll be able to rebolster my accounts back up. But like I've done it, all right. I've gone into this market like crazy, and I've also sold and moved some stocks. Some of you have pointed that out. That I've actually sold TELUS because it actually held up better than the S&P and better than most of the stocks that I'm holding. So I was like, hell yeah, like I'm going to take, like I told you guys, like if you see better value out there, like I love TELUS and I might buy it back here soon. But for the time being, I'm like, I don't care about its dividend. And I get that there's some good upside in the short term, but like I'm a growth guy. And when I see growth stocks absolutely plummeting, to ridiculous levels that don't make sense. Like I'm going to be choosing Google, obviously, any day over the week over a company like TELUS or even the S&P 500. Now, what's really interesting is I'm eyeballing my Take-Two position, and I'm trying to hold my cojones with that one because I am actually still flat. Take-Two has actually been the strongest performing stock I have bought so far. I'm glad I put 30 G's in it, and since I bought it, the S&P has plummeted. So I'm like, man, I could literally just wipe my trade clean of Take-Two, put it all in the index, and get like a 15% discount from where I've been buying Take-Two since the S&P has dropped. But I don't think I'm going to do it because I love video games too much, and I still have high hope, as many people seem to, and is why the stock is holding so well. I don't know if that's a good decision. You're going to have to stick around to find out if that one works to my favor or not. But man, I am eyeballing that stock a lot, being like, wow, it would not hurt me to sell that right now, my tax advantaged accounts, and transfer that shit over to the S&P. But here we sit nonetheless, and this is what the stock portfolio is looking like. And yeah, I bought Meta because the wife, I'm actually shocked at how fast Meta dropped, because I think it was a very sizable position. So when it dropped 25-30%, man, like that was a huge amount of dollars that were wiped out. So I'm like, I like Meta. I told you guys, it's like one of my number one stocks. It's just because the wife held it, I didn't want to buy it. But again, now that Google, Take-Two, some of our other stocks have just really overtaken our portfolios, I'm like, man, Meta's looking cheap. It's kind of one of these things where when you hold a certain sector allocation of stocks, like the market will tell you what ones go on sale. And if you believe in the businesses, like in market environments like this, I see the S&P tanking, I'm buying that. If Google and Meta are tanking, I still believe in them, I'm buying that, right? Like you like some of the smaller caps out there, Aduro, like there's so much discount going on. You just got to pick where you're comfortable. And I would really, really be careful if you're buying those mega brands. I'm telling you, Nike, any of these companies right now that have to deal with China, it is an absolute shit show. The level of disrespect, and I get what Trump's saying, and I get that there's been a lot of ripoff of IP. I get that. But man, when you just throw the gloves on the floor and you start shit talking, whoo, baby. I mean, when China has that much control over our like manufacturing and like our global supply chains, whoo, baby, you're playing with fire. See how that fucking burns, because I don't like it one bit. And I'm not saying the market can't go lower from here, guys. I have gone crazy because I'm nuts. Don't do what I'm doing. I would cost average, maybe extend it a little farther into the future. I just went crazy, and I don't know if it's going to work to my favor or not. Well, time will tell. I'm still like 50% cash bonds. Yeah, I mean, if that's your comfort level, by all means, this is what I keep saying. Like, you got to figure out your allocation. I would never be out of stocks. Like, I'm always going to be in the market no matter what. And because I'm younger, like I'm willing to stomach this volatility. But if you're older, or if you're in a different level of risk and you can't handle that volatility, there's nothing wrong with being 50% cash and bonds. You can easily get a 4.5% yield right now. And that is a great return, as Buffett and these banks are kindly reminding us on their earnings. Like, Berkshire is going to have a blowout earnings because they're fucking printing 4.5%, 5% on $300 billion, right? I mean, like, there's nothing wrong with that way of investing. You don't have to be as crazy as I am. Xi has been pretty calm, like the poker player holding the best cards. That's the problem. That's what I'm saying. Like, these unintended consequences. Forget robotics. Even if you brought robotics to the United States to replace the manufacturing, the cheap labor that China, India, Vietnam, all these countries offer us, it doesn't matter, because you would never, because again, if China comes out and builds these products and we just allowed them to be shipped into the country, because you got to understand, this is a transitional thing. This isn't going to happen overnight. Like, to rebuild these supply chains will take multiple years. And in the meantime, if Trump destroys the relationship, forces products to be made here, they're going to be made at a far superior price. And if China is doing what they're doing now, where they're like, hey, we can make these products our own, we can make them literally just as good, and we can make them for a 20th of the cost, we're going to have a real problem. Like, I don't think you're ever going to replace the brand of Apple. Like, let's be real. iOS, you can't. Apple, like, some of these companies are going to get through this, but I can't. Like, I buy shitty ripped off shoes, guys. Like, I bought name brand Nikes. I have name brand Nikes, and I also have Alibaba version Nike shoes, and I actually like them. I have bought and ripped off brands before, and I don't have a problem with them. I actually think they're fine. Like, so I mean, you got to be worried, right? That we're in a war. And I don't think you got to understand that it is a tariff war. People aren't dying right now, but it is still the definition of a war. It's an economic war, and it's horrifying. You see it. I mean, it's currencies, what could unfold for companies and their businesses. My God, I want your spreadsheet. It's cool AF. Yeah, you can get it at kylelivingston.com. Links in the description below. I made one that's for your phone as well. They are spreadsheets. I tried to make them so you could just plug in the numbers, and it's just kind of plug and play. It auto converts the currencies. I have one for US, Canadian. However, just be aware, like, you may have to finicky with it a bit if you're changing things up a lot. But yeah, I like the spreadsheet because it brings all my accounts into one place. Because between the wife's accounts, my parents' accounts, like, I'm using a corporate account, I'm using my Scotia iTrade accounts. It's just nice to bring it all here so I can see how everything looks combined. It's very nice. Yeah, I mean, if you use iCloud numbers, you can literally open it up on your iPhone. It's very usable. I'm out of cash, lads. Join the club, man. Like, even like now, I've thought about leverage because I'm like, whew, I'm not going to get that crazy. This isn't the pandemic. The pandemic, it was easy to use leverage because you knew it was like a temporary thing. Some companies were going to get slaughtered, but you knew that crash was temporary. This crash, like I said, I think Meta, Google will be fine. I think they're pretty hard businesses, just disrupted at this point. That's why I like them. They're not dealing with global supply chains. Could China, could other countries hinder them a little bit, start finding them, start putting taxes or something on them? That is a worry. There's risk. Don't get me wrong, but I think there's far less risk. The whole thesis for buying Take-Two Interactive is to wait till GTA 6 drops. How could you consider selling before that? Well, I know. That's what I'm thinking, but my God, it's holding up so well. I don't know. Like I said, I'm sitting on it for now. I'm not getting too handsy with it. Let's get into some of the other comments and questions that I've been getting over the week, and then I'll kind of come back through this. So many of you got so many comments. I saw this clip on Iced Coffee Hour. The West do not want to work in sweatshops, so it's going to be other countries, China, India. Yeah, again, it's kind of leaning into our strengths. That's what like Elon's brother, that's what all these billionaires are saying. Even Elon probably. I mean, he's been hounding some of the economic advisors Trump's been touting are great. But that's what they've been saying, right? Like we don't even include into these trade deficits our literal technologies. If it is software driven, it doesn't get included in a trade deficit. That's why all these people are saying like it's all fugazi. These numbers are complete bullshit because we are the kings of software. These softwares are used globally. I mean, look at Palantir, look at Google, look at Facebook, look at these. Like these are all things that aren't getting included in any of these trade deficits. Like that's what Elon's saying. Like lean into our strengths. China has manufacturing. That's great. They still don't have software. They don't have the lead on tech that we have. Like I don't know why we even care about this stuff as much, right? 400% tariffs in China. I know it's going to get crazy. It's going to get crazy for sure. How's the Fed going to cut rates? They're not. I think it's going to be unintended consequence. I think the Fed was getting to the point of cutting rates. Oil was coming down. All this stuff, regardless of what Trump was doing, was putting us in a pretty good position to get rate cuts. But because uncertainty is back, guess what uncertainty means? Let's wait and see. That's the Fed's approach. And I think it's an appropriate approach. You have to admit that Jerome Powell has a lot more steadfast, methodical thinking than Trump seems to. But being Canadian, do you worry much about the exchange rates when you're buying US? I've said this time and time again. Let's see how the US dollar is doing because I know it's been slowly collapsing because the Canadian dollar has been going up, which has been helping my buying power because I don't care what the dollar. Oh my God, it's already down to 99. Look at this. Look at the collapse here. The US dollar just became like the strongest thing ever. And like, look at Trump just destroying it. People are selling out of US dollars like crazy now. The US dollar hit a high we haven't seen since like the dot-com bubble. And we were just rallying back to like the strongest dollar since the early 2000s. And then Trump comes in and it's just been an escapade to the downside for the last 3 months. Oh, baby. I mean, that's good for us that want to travel, though. And, if you got Canadian dollars, I mean, look at the CAD. Let's look at CAD to USD right now, or CAD chart. What's the CAD chart look like? Yeah, I got ripped here because, I mean, I was buying here. I was trading US dollars nonstop down here. But yeah, I don't let this affect my buying because, again, like to me, I just want to own the greatest companies. The greatest companies are trading in US dollars. So be it. I'll buy them in US dollars. I hope the rate of return outpaces the dollar conversion value. But as I mentioned, I can spend my US dollars without converting them back to CAD. But this is strengthening all these economies. I mean, what's the yen doing right now? Yen chart. Let's see how that's like. Even the yen. Look at the yen here over the last month. The yen over the last year has been rallying back too. It's up 8%. Wow. Look at the crash though. This is what happened to all currencies, by the way. The US dollar became so powerful because they left interest rates that high, and that led everybody running to like US treasuries and bonds and all that. And that's probably the only thing holding the US dollar up. I mean, if the Fed cuts rates, I wouldn't be surprised if we see a mad uncoupling of U.S. treasuries and just any U.S. fixed assets. How is the money? What's it called? The fixed assets. I'm blanking on it so hard. It'd be nice to see. Tell me, why am I blanking so hard on this, guys? I need to know what the fixed assets were. When people is it treasuries? Is that what we're looking at? Is it just treasury cash? I'm trying to remember what the cash chart was. Is it treasury? It's not treasuries. Am I just an idiot right now? Because what I'm looking for is the level of cash that's being held. Is it just cash? Why am I being so dumb about this? Cash US chart. I'm trying to remember what the term for it was. I'm blanking so hard. I can't even remember what it's called right now. Not the M2 money supply. because we hit records, right? The amount of cash sitting on the sidelines, not reserves, like the literal cash people are just putting into bonds and treasuries and all that. You can actually see money market funds. Fuck, I'm an idiot. Jesus, money market funds. That's what we want to see here, folks. Money market fund charts. Yeah, this is what I think is going to uncouple, because even that guy that just said in the stream here earlier that he's like 50% bonds and all that, anybody that's run into cash, that's what's sitting right here right now, right? And all of this is just US money market funds. So I figure if they cut interest rates, like we'll see a mad uncoupling of this. And I don't think it's going to run into equities. I think it's going to run back to the countries it came from. And I think we're going to see the US dollar drop precipitously. It's just going to keep going down. But anyways, what else we got going on here? Thanks for the vid. Excited to see how Meta does. Question, Microsoft is pretty low too. I just wanted to know why would you pick Meta over Microsoft? So Meta's been our primary play, even though, again, it's in the wife's account and I don't hold a lot of it, but I did. And like I said, it's just a matter of balancing between the accounts. But Meta's always been my number one stock. And the reason it's always been my number one pick is because it has the lowest market cap weighting, but the best growth rates. So Meta is one of the few mega cap companies you can buy that was trading. I remember back in the day, it was trading like 500-600 billion, and it had a phenomenal growth rate. And it's obviously going to offer the highest rates of return because it's easier for a company to go from 500 billion to say 1 or 2 trillion. And we saw it happen with Google. And Meta is a powerful company, and I think it's going to easily rally up to 2 trillion, being one of the largest companies. Meta is just a really easy company to buy because it has the highest. It'll have the higher return rate over Microsoft because it just has a smaller market cap. Like, I don't want to be getting into the delve of, if you're talking about Mag 7, I think Meta is the best Mag 7 to buy, or at least it was, when it made these major dips. I still think it's a good buy here, but, obviously we've been holding it. Like we've been holding this since the pandemic. So, I mean, like, we're up hundreds of % on it regardless. But yeah, I still think Meta's, for that reason, is just an easy stock to buy. And yes, somebody mentioned, did you sell TELUS stock? Yes, obviously I sold TELUS recently. And then somebody's like, why don't you leverage Meta? Yeah, I don't. Do you guys leverage play it? I was thinking about that. I always think about it once in a while that, is it better to, if we believe in these companies strong enough to do 2x leverage? It's nice they have these ETFs now. And I did play a bit of a 2 leveraged ETF on the real estate play. And I'm glad I got out of it because that trade didn't work out too well. I was able to get a gain off the 2x leverage real estate ETF, but these ETFs aren't the worst idea to buy if you think we're going to go back into a bull market. And I think Meta's going to have great earnings, but this isn't as predictable as I'd like it to be. This isn't a market where I'm like gung-ho that things are just going to work out. You got to be a bit careful because Meta is any individual stock can drop 50 to 80%. So I don't want to 2x leverage a company I know in bad times can still drop an insane amount, right? So that's why I usually don't use leverage. I have to be pretty damn confident to use leverage. And even then, like, my eyes on it all the time. My brother, who is the most computer-friendly person, just opened a Meta account to sell products on. So I guess it's a good sign for Meta. Yeah, Meta is great for product sale, Instagram, all that stuff. Like I said, we use WhatsApp. Marketplace. I have never had trouble selling anything on Marketplace. The most random shit that I've sold on Marketplace include a friggin' radon detector. Took me a little while, but somebody actually bought it. Like literally a top hat that I had from some cheesy thing, like an actual old school top hat. I've sold the weirdest shit. Like I had that like a cool little Juggernog mini fridge from Call of Duty that was like a collectible that I sold for a really decent price. And I love it because eBay rips you off so bad, but I can't get over the shit that I bought and sold on. And it's so much better than Kijiji. Kijiji's shit. You get so much spam. At least Meta, you can see like who's buying your stuff. You can see the accounts. You can see who you're meeting. It's I honestly, I think Meta is the most underappreciated company for just business to business or person to person selling and some of that stuff. It's quite incredible. It might be the last console generation too. Future is going to be cloud-based gaming. Yeah, it's coming. Cloud's getting there. Would you buy QMax? Let's take a look at QMax because it's one of the leveraged ETFs, isn't it? QMax. Let's take a quick look here. The Hamilton Technology Maximizer. Yeah, you're talking about how long is it? See, my fear with these new ETFs, because a lot of people are pointing out they have great returns. The problem is the returns are too short term. Like I said, I have nothing against these option ETFs that they offer like longer term and they can prove that they're stable, because usually in more volatile markets, it's very hard to get the yields usually fall off a cliff first and foremost. Like I was comparing it to Devo, right? Like Devo's a great dividend ETF or a maximized dividend ETF. But let's just take a look at this because the history is just not long enough. It's only been around for like barely a year. So like I'm not a big fan because again, don't get caught up in the 12% yield. I mean, that's just not going to be true because I mean, look, since inception, this ETF has offered a 25% return, right? Which is not bad. And it actually seems to be holding up pretty good in the downturn. But I mean, look, year to date, it's down 11%. On the 1 year, you've made a 7.5% return. So unless you bought this ETF right when it IPO'd, like your return has been not the greatest, but neither is the S&Ps, right? So like, there's just not enough data here for me to get all that excited. Great holdings, very diverse by the looks of it. It'd be neat to see how much they're writing against the underlying holdings. But like I always compare it to Devo, right? Like if you're looking for option ETFs, I feel like this is the gold standard. Devo's been around for a very long time. You've got like almost, back since 2017, 2016, almost a decade of history, about a 4% yield. It's been very, very sustainable, great underlying assets, very well managed. Load up on SCHD, SCHG, and VOO oil stocks. And be careful with oil stocks. Oil stocks are a bit scary. Have you guys seen the oil or the gas prices? Holy shit. I like $35 fills my tank now. I haven't seen prices like this since the pandemic. I'd be very careful with oil right now. The earnings are going to get very bleak here soon. Look at oil down to 61 a barrel, man. Yeah, because Canada just cut the carbon tax and we've been seeing oil prices continue to go down. Yeah, so I mean, we're not going to get the glory days of oil earnings like we've had them. So just be a bit careful with buying oil right now. I'd wait. They're trading at 2 level of highs, right? Like what's Suncor trading at right now? Yeah, I mean, Suncor is like trading toward its all-time highs here still. I mean, it's really only off by, I don't know, about 20% from that last peak, but still way too high for where oil's at. Just be careful. Good entry price on VDY. Yeah, I'm holding off. I did buy a bunch of it already, but I'm just holding off because I think the energy sector is going to get hit on earnings, or they're going to start lowering guidance. So just be a bit careful. But yeah, I mean, cost average. I mean, I'm still holding it. It's not like I'd ever sell it. I'm still confused. How can this keep going? I'm not sure what you're referencing to. Seeing the United States went after everyone at once. Could every nation just collude, dump all their treasuries at once? Maybe. I don't think they'd want to, though. I mean, like, again, you got to put the administration aside and realize that, like, you just want to work with companies and people. Trump is just kind of interfering with that. So I don't think, honestly, at the end of the day, we're just people, right? Like, we're all just people trying to do our jobs. So I don't think countries and economies want to collapse themselves by like killing the United States. I think they want to work with the US. I think everybody does because it's a huge economy. It's the largest economy. But I think Trump's overplaying that. And I think he's going to potentially damage that if he's not careful, because the ones that are getting hurt are me and you. The average person is the one that's going to get wrecked if he's not doing this carefully, right? But anyways, peak oil is 2060. Most of us will be dead. Yeah, when the reserves start getting depleted. Oil seems risky, price too low, yeah. But otherwise, folks, it is still continuing to be, one sec, see big tech doing layoffs. Are they doing layoffs again? After the pandemic, that was pretty rough. I'd be surprised. But it's scary, right? So, I mean, at the end of the day, folks, just be cautious with what you're doing. I know I'm doing this as entertainment value, and I've been getting like super giddy. I've been throwing ungodly amounts of my money in the market. I'm very privileged to still be employed. I'm privileged to be in the position I'm in. But even I recognize the risks. I understand that like this could be detrimental. I'd like to be financially free by 35, 40. But, if this market takes a wicked turn, things could still materially get much worse. And maybe I'll have to ride it out for a bit longer than I was anticipating. But that is the reality of life. It's not always what you want it to be. But I enjoy my job. I enjoy doing this, and I enjoy the journey with you guys. So, like I said, we'll see where we go. And we'll be on this ride together regardless. And I'm always 100% in the market, with the exception of my stock market emergency fund, which is now gone. So I'm mostly, if not at all, 100% in this market. So GTA. Come on, baby. Put the noise behind us, and let's see a great video game that breaks media records and gives me something to concentrate on that isn't complete fluffing bullshit. Give me something fun this year to get through the bullshit. Anyways, folks, stay cool, stay awesome. And as always, I look forward to catching you in the next one.